Happy Tuesday. Not even Tuesday. Wednesday. Happy Wednesday, everyone. If it's Wednesday, then we're doing the Gamma Experiment, episode 3 here. I'm going to just share my screen, run you through a little bit of, hey, what are we doing? What is this all about? And then I'm going to go right to the charts. I've already made one trade today that was a winner. I've got 2 resting limit orders and the possibility that I can get a couple more opportunities. I'll show you what they are and how I intend to trade them. First off, let me explain what I'm doing here. Just recently, within the last month, the options market makers and the options exchange have decided to issue options that expire on Mondays, Wednesdays, and Fridays instead of just Fridays on the Mag 7 stocks, the most liquid and heavily traded stocks out there. You know the names: Apple, Microsoft, Meta, that stuff. And they haven't been, they've had weeklies, but they haven't had, Mondays and Wednesdays. And then if there's enough demand, they'll end up going every day with these. They'll have options that expire every day. The important thing about this is the fact that it gives us last day of expiration, or of 0 DTE, 0 days to expire, trading on expiration day. It gives us more opportunities to do that. The thing about trading on the day of expiration might sound crazy, like, why would I buy an option only that I have to exercise it tomorrow? No. You want to buy that option today on the day of expiration, because even a little bit of move in the stock can make a lot of move in the option. And that's more true on the last day of expiration than it is on all the other days. And I want to try to give you kind of an idea of that. So what I'm calling this is the Gamma Experiment, because Gamma is one of the option Greeks that describes whether or not price changes will accelerate rapidly with just a little bit of move of the underlying. The closer we get to expiration, the higher the gamma. The closer the price is, the closer the strike price is to the actual price of the underlying, the higher the gamma. And the closer you get to farther later in the day, closer you get to the very end of the day, then gamma gets higher and higher throughout the day. The last 2 hours of the day, which is what we're about to get into here, have the highest gamma readings of any option time period anywhere. These are days, or these are the periods of time that option market makers kind of fear, because prices can go all kind of crazy. They make their money by charging higher premiums earlier in the day and other days, so that even if they have to lose some at the very end, no worries, they're covered, right? If, however, we're only trading in the last 2 hours of the day of expiration, there's some serious opportunities. And so that's kind of what this Gamma Experiment is. If, in fact, I can get all 3 of these together and I can find a good signal to work with, I have extreme opportunity. Well, let me show you what kinds of trade signals I'm working with. These come from EdgeFinder, the sponsor of this program. And I'm using EdgeFinder to identify something I call the dead zone. The dead zone, look at this. The dead zone is great. That actually did fill. I'm not exactly sure how, but it did. Sorry, that's not a 252 call. It's 251 call. So just as I was talking to you, I'm not quite sure how. I think it must have dipped down right in there, but I got this position filled. So I'm going to come to that in a minute. The dead zone is what I identify as an area where prices are going to be attracted to. Prices attract towards the dead zone. So here's Meta. It opens up today, goes higher. Dead zone's down here, though. So sure enough, prices kind of came down. But then once they got lower, they went up. And then once I got to this high point right here, because of course the dead zone that I'm interested in is only these last hours of the market. Once it got right up to here, see that red line? That's my marker. And I got in at $1.05 on the 652 put, the first one, 652 and a half put, the first one out of the money. And this was a $3 or $2.80 move. So if in fact I could, get into the option and have it drop that much, then I knew it was time to get out. I did. I got in at $1.05, got out at $1.75. Pretty good, right? About what are we talking about? 35% gain there. I was really surprised. There were some things I learned in trying to trade Meta. The option spreads are a little wider. Even a dollar's move on Meta because $600 stock doesn't seem to make a whole lot of difference in the options. But that being said, the setup, the pricing setup worked very well. It got right down to that 287 target, which I like to try and take. I like to let it go farther if it can, but as you can see, it started to bounce. And by the time I got out, see, this thing was clear up at like $2 when it was right down here on the bottom. But by the time I could get the order on, and it dropped all that way. So, but nonetheless, I'm looking for this situation here. These are Keltner channel bands. The settings on these Keltner channel bands, let me show them to you just so you know. I'm in TradingView. Keltner channels are the moving average, whatever period you choose. I choose the 10-period moving average, and then multiplier of the ATR. So the average true range times 3, starting from the 10-period moving average, and then going up to, actually it's the 5-period moving average. This is the moving average up here, and the ATR length is 10. Anyway, those are the numbers. 5 on the length, 3 on the multiplier, 10 on the ATR length. And that gives me these bumpy lines. These peaks right here, or troughs in the case of the upper side, if I extend that price level out, they tend to be excellent markers for where to pick up the price. That is the whole secret. And then I use the dead zone, the height of the dead zone, as the target. So if I get in here and then I wait for a target of, well, in this case here on SPY, $3. Now I had a resting order waiting for this, but it didn't fill. I didn't manage to get filled at $1.23. But as you can see, if I had been filled at that, by now the price on that, let's see, that's a 674 call that I was looking to try to get in. If I had gotten in at 100 or at $1.23, like I was hoping to, then it would, well, it's up to $1.91 right now. The lowest it got to was $1.46. So, and probably had that one priced too low. Anyway, it's up 50 cents, 40 cents. It's $1.80 right now. 40 cents off of its low. We'll see if it goes up and makes a $3 target. If in fact it makes a $3 target, good chance it will have doubled in value from this purchase point. Now, the one I did get into, just even as we were starting this program, I had a resting limit order and it filled, is this one, IWM. And if I look at that one right now, it's showing that it's currently at a price of $1.16. So I got in at 90 and I'm making 26 cents on that, 26, 27, somewhere in there. So, times the number of contracts. If I had bought 10 contracts, that would be, $260, $270. We'll see how it goes. I'm looking for a $1.21 target. So let's see. 151 plus $1.21 is going to be right up in here. Let me draw that on the chart. So if in fact I get this far, $1.21, that's where I want to consider taking the profit. And notice that if we get that far, there's a chance it'll break through and keep going. And, I could just raise the stop and trail the stop up, see if I can get it more. There's also the possibility it's just going to run right down, and the trade's going to be worth nothing by the end of the day. But all I can lose at this point, all I could lose is the amount that I put into the trade. And so that's a great thing about this. I can actually control my risk. I can control my risk by just buying the number of contracts that fit the account size I'm working with. If I were trading with a, say, $2,000 account, this would be too much risk. Each contract, 90 cents, 90 cents for one contract is $90. $90 would be 4.5% risk on a $2,000 account. So this really isn't for small size accounts like this. There are other things you could do to get the risk lower, but generally speaking, you really want to be trying to trade this with something like $5,000 account or more. If you had a $5,000 account, you could spend $100 and be risking only 2% of your account. That's pretty good. In terms of trading, good practices and so forth, the very best thing you can do when you're starting out is risk only 1% per trade until you kind of get it down. Once you've traded profitably for a little while, maybe a few months or a year, and you have a sense of, hey, I know what's going to go on, then you can move up to 1.5%, 2%. You could even get to 3% eventually if you, 3 or 4% maybe, if you really knew what you were doing. But most people who do that, they don't risk 4% out of the gate just every single time. And people that do that, they're waiting for their bankruptcy notice. That is to say, where their trading account gets drawn down so much that, like, forget it, I'm done. There's a reason for that. It's if I have time, maybe I could actually show you the math behind the trading. But simply put, losing streaks happen. If you had 10 in a row losers and you risked only 1%, your account balance would be down 10%. That's not fun, but you can come back from that. If you're risking 5% and you're having a 10 in a row loser, you're going to be down 45 to 50% on your account. If you have a $5,000 account and you drop it down to 2,500, you're not going to be terribly enthusiastic about trying to build it back up. And depending on what you're trading, you might be inhibited from being able to buy more, buy enough of what it is, contracts or shares or whatever. So the bad news is here, I'm in this IWM trade, and it's not running right up to the target, at least not yet. The good news is I might be able to get into this SPY trade that I'm kind of hoping comes down and fills me at this price level that I wanted originally. Let's see what that price is quoting right now. Looks like that is $1.48. So, another 50 cents down, be 25 cents drop in the price, should be right there, right about where my limit order has in mind to try to pick it up. So we're watching that. Let me run through all the setups. Here is Apple. I don't initiate any trade in the dead zone. The statistical advantage comes from being outside of the dead zone. And I try not to, I don't make any trades unless I feel like I've got some sort of extreme price level, and I use these red and green lines, the Keltner channels, to figure out where those are. Right now on Apple, that's going to be about there. If all of a sudden Apple went roaring up, then I'd be interested in shorting it at that point. If it goes down, I'm not interested in buying it unless it goes down, way below the dead zone there on that. So that's Apple. Amazon, I've got this set up. Now that's really interesting. I could buy Amazon at the bottom of the dead zone. I sort of feel like I'd have to be desperate to do that because I have better setups out here today. Tesla, it's below this point here. However, it's above the dead zone, so I'm only interested in going short on anything that's above the dead zone which is, Tesla today. Here's the Google setup. I'm going to move this line down because if that thing drops, then the bump is kind of nullified. At some point, it'll make a bump. It'll come back up, Great. These are all going down. That just means my, SPY trade is likely to give me a fill. Here's Microsoft. This is one that we could actually see an entry on. In fact, I probably want to set a limit order in my own. Have I been filled on SPY? I'm thinking I have. So here's Microsoft. That's a setup. I'm going to come back and maybe create that setup here. Meta has ended up going down. If I'd have held on, who knows, could have had more there. And here we are. This is just what I was hoping for. My guess is if I check my brokerage, that has been filled. I check my account. Sure enough, it is filled. I got filled at a price of there we go, $1.23, just like I was had the limit order resting for. All right, now if it just keeps going down, well, okay, bummer. You don't win them all. I'm going to lose that one. However, this happened before already today, where it hit that line and it came back up and made not quite a $3 run from the bottom, from way down here. Yeah, it made $3. But from where I would have gotten in if it were in the time frame, it would have been just a little short of what I was hoping for. Here in this case, we'll watch it and see whether or not by the end of the day, if it turns around, rebounds, and comes back up. I'm looking for a $3 move. So since I got in at 634, the underlying price was 673.74. Well, actually, no, it's 673.84. I'm looking for $3 up from that, 676.84. So, right in there. Basically, it's got to just get past that old high, and that'll be the move that, I'm interested in trying to capture. I can make some sort of on-the-fly decision about whether to, cut it short for whatever other reason, but that's my standard rule. That's the goal of the trade. IWM, it was filled, earlier back here. As you can see, it's, back down again, and we're hoping to see it do its thing, but it hasn't done it yet. All right. So those are the setups. Hopefully that if you're really interested in these, then, do a screen capture. Don't do any of these that are in the dead zone. Amazon buying that. I mean, that would be like buying SPY right now. So it's not crazy, but I'm always interested in something that's outside the dead zone that's going to come back to it. Tesla, Google, Microsoft. This is probably one that you'd want to screen capture if, in fact, you were interested in trying out these trades. If you haven't ever done it before, I would not recommend you just jump in and start trading. Paper trade this stuff, right? Give this even if all you did was capture this and write down what's the price, what is the price quote I could have got in my brokerage if I were trying to make this trade. But here it would be buying an option on Microsoft. You'd buy the first out of the money option on Microsoft, which I need to check here. What the strike price are. Yeah, they're 250s. So the first, if it were down here below 402.35, then the first one out of the money would be a 402.50 call. Well, right now, when the price is way up here, that's at $1.60, and that is about $1.30 higher. So you figure 60 cents. If it were to drop straight down to here, that option would end up being about $1, is my estimate. So you get an idea. Like if you wanted to put this trade on, then what you'd do is you put a limit order for the 402.50 call option of $1. So you buy it for $1, and that's like $100 per contract, right? And if you put the limit order in, then if it comes down, great, you get filled, and doesn't matter what else you might be doing, what other screen you're looking at, or you can just get filled, and then you come back and look at it and see if it's done its thing. I try to take the mentality with these trades that I'm either going to win them or I'm going to lose all of them. So they expire worthless in a couple hours, and that's zero. Or I get my target is to try to get double if I can, but this target right here, the price move target, that's my first indication. If the price has moved that distance already, then if I feel like the price is weakening, if it's not going to continue its trend, then I just quickly take the profit. But what I've found is that usually if I'm just patient and it goes its full target length, then I'll be able to get more than double the price I got into for that. So if this thing were to go up $3, well, this thing would increase by $1.50 at least. With the gamma score, it could even be more. So that would be $2.70 at a minimum. Could be very well be $3 in price. So I'd be getting more than 100% return. And that's the key. If in fact I win this stuff more than 50% of the time, but I'm making at least double on average, well, then the math works out, right? I end up making larger wins, even if I only win 50% of the time. Now, if I only win 40% of the time, I have to win a little bit more on average than, just a doubling of the option price, 100% gain, 100% return on risk, be technical about it, right? If I have to get 100% return on risk, that would be $2.46, right? I'm at $1.23 now. I would have to get $2.46 to make it break even if I'm only winning 50% of the time. If I'm only winning 40% of the time, then I've actually got to win something like, 120, 125% or something, right? So, or it's even more than that. I think it's 170%. So I need some big wins. Well, luckily in this kind of trading system, big wins do come along surprisingly frequently. In fact, if I could show you here just what's happened in the past couple of trading sessions, you'll see that here's one here. So I'm trying to remember. Oh, it was on QQQ. All three of them had this fun little thing happen. So here it was. Here's QQQ. I've explained to you kind of what my strategy is. And so you see that when it came down, dead zone's up there, comes down to here. There's the bump extended. I got in on the 599 call. That's the first one that was out of the money. I got in at a time of 13:30 Eastern time. And the price there right at that moment was $1.29. By the time I got to 15:30, right up here. Yeah, I mean, I think it was, no, it wasn't that one. It was like right at the end of that one. I was in this candle, but the price was right around here. That's where I sold. And I sold and captured $6.24. Had I held on for another few minutes at a peak, it would have been 905 that I could have got. Just 1 minute after the market closed, because QQQ and SPY and IWM, they all trade for 15 more minutes afterwards. This one here actually went up, and it could have got 922. That was the highest price I saw printed on there. However, there was a 40-cent bid-ask spread. So I really would have only been able to get something like 880 at best. So I could have done better, but I got 624, and even the idea that somehow I could have done better. That's interesting, but look how well I did. I went from $1.29 to 6.24. That's not quite quadruple, right? Oh no, it's more than quadruple, isn't it? It's 480 plus, yeah. So anyway, this is just over 4 times, 400% gain, right? I mean, that's fantastic, because one of those is going to average out a bunch of others. Thing is, that wasn't the only one. On that same day, Microsoft had a trade that I got into, and here's this at 27 cents is where I got in. And then when Microsoft went flying up at 15.58, right here at the end, it was $2.36, about 9 times the size of the purchase price. So you can see big trades do come along. If you can make wins only 40 or 50% of the time, this should pay off. That's the experiment so far. The theory behind the experiment. So let's go see where we are. Yeah, it's just quiet. But that's not unexpected. The real moves tend to happen in the last hour, even in the last half hour, just kind of like what I saw, what I showed you with. Here yesterday was this one on IWM. It got right up there. See, this is why I love this signal. It doesn't always work out. There are plenty of times where it just goes against you. But that signal is a great place to look for, 2x, 3x, 4, 5x opportunities to come from. Here's the dead zone. Prices were above the dead zone. Got that little bump, extended it forward. Right here is the place where I got in. 55 cents was the cost of the 257 put. First one out of the money at that point. And then this happened, right? I was waiting for the 248 target. By the time it hit the target, it was $1.30. So already more than double, but holding on a little bit longer. And then later through here, $3.25. That's the place that was best to exit the trade. I mean, 5 to 1, right? 6 to 1 almost. This is, not quite, just barely under 6 to 1, that one. So those were 2 days back to back. Now I've been trading this just for about 3 weeks. I don't have a huge long track record. Well, because these things have only been out there for just about that much time. And so we're barely getting into whether or not we can sustain this. That's why this is called the gamma experiment, right? But meanwhile, so far, the track record seems to bear out. In my own trading account, I've used these trades to increase the value of my account by, let's see, real time, it is up. What is that number? Well, I'll just tell you, it's up about 5.5%. So pretty good for, if I could do that every month, or every week, that'd be even better, of course. But we'll see. I intend to trade this for an entire month, see how well I can do, trade this in another month, see how well I can do. If I find that, hey, I can just keep this going, then great. I know I've got a viable trading system. I had already paper traded, zero DTE options with the dead zone and this method. So it gave me the confidence to believe, hey, we can do this. But when zero DTE options started happening on the Mag 7 stocks, I realized, okay, opportunity here is increased because there are just going to be more moments for trading. Okay, so I'm sitting on both of these, SPY and IWM. They're not going anywhere, but they actually are green. That is to say, if I were to close them out right now, I wouldn't lose any money. But that's not what I'm here for. I'm either going to let them go to zero or make, um, well, 50% is probably my minimum. If at the end of the day they were just kind of sitting there, but they were making 50%, great. I'm gonna take that. I mean, not end of the day, but close to the end of the day. If I thought that we weren't really going to get any kind of move, but I'm trying to just say, some of these are going to lose, some of these are going to win. I'm not going to try to win every trade. So if it doesn't go double or better, then great. I can let it go to zero, walk away, because enough of them are going to go double or better. And especially if I'm paying attention to the target. Now, I took this one on Meta earlier today because price was acting squirrely. I didn't really like the options insensitivity to price. I'll think twice about doing Meta going forward, because it's just the option bid and ask prices are a little farther apart. But that being said, it worked out. It did go the target, did not make a double, but it was tradable, usable. You can see that's turned out to be not that bad. If I'd have waited till here, I could have done a little better. But now it's back up. I mean, who knows? Who knows? Maybe this is going to turn around and go way down. I'm like, oh, I should have just let it go to double. But if it happens, if it hits that target rapidly, like it did, 20 minutes, and I'm kind of early in my session, as I was in the case of, it didn't happen in 20 minutes. It happened in about a half an hour from where I got in. So if it hits that target, in a short period of time, then I can just take that trade, and chances are I'm going to get another opportunity later on in the session. So that was my philosophy of that. Oh, okay. Now we're getting a little bit of move in the favor here. In fact, we are almost to the target on the IWM, and the amount I got in at 90. It is now trading for, it looks like $1.40. This is a small target here on IWM, and I'm kind of hoping for a doubling. I'm going to let this run. I'm thinking that we'll see it challenge these prices here. It'll kind of go up there, and but because the target is only $1.20 right there at the end of the arrow, let me just move that out of the way. $1.21 would look like, right? No, fine, $1.20. So if the price gets up above the top of the arrow, then that is my target, and I could consider taking the profit right then and there. But because this is sitting right on resistance, some people, they like to take profit at resistance. But I find that resistance is a great place to let things run, because if it breaks through resistance, then you're going to get a much bigger move. And so I've already got one profitable trade today. That's nice. That gives me a buffer to sit back and rest on, and then let these things go if they will. So that's good. That's good. This turns out to be working out, right? Here's the one, SPY. It's also going higher. Oh, yeah, baby. Keep ticking higher there. Let's see what that one looks like today. Yeah. So at a price, at an entry price of $1.23, then we're now trading at $1.94 for that. So just another 30 cents higher. Oh, it came down pretty quick, but from its peak, it was at about $1.93, another 30 cents, and that would be a double. So this is, are you noticing what I'm noticing? How many times price comes to this line that I identify, and then even if it goes against it a little bit, it doesn't go against it as much as it turns around and goes in the favor of, right? That's why I like that line in combination with the dead zone and the value of the dead zone's target area. Altogether, it makes for a pretty good trading system. So hopefully this has made a little sense to you here. And if you're interested to know more, if you're interested in maybe getting some guidance on how to make these things work and so forth, well, I would recommend that you connect with me on LinkedIn, X, TradingView, or Instagram. I'm Gordon Scott CMT on any of those platforms, and you'll be able to just shoot me a question, ask whatever you like there, and let's see. Yeah, these are just some examples of stuff that's happened, but I've shown you real time examples. Uh, this I'm going to try to keep doing, not for very many more weeks, maybe 3 more weeks. Uh, uh, keep doing this for free. If in fact 3 more weeks from now it's working really well, then this experiment will go behind a paywall. But that's just what I'm a decision I'm trying to make here in real time as I'm watching these trades. Okay, let's see. Yeah, no, Q did not. We looked at Microsoft. Microsoft, that happened way back there. It never did come down. I was kind of hoping it would, but it didn't. Meta, that line is still valid, right? If in fact we were to come up and get above that line, probably this thing would turn up, and then we'd want to move the line clear up to there. So Meta to short, again, you'd have to be above 655. Apple, you'd want to be above 261 to short. Amazon, now I had said this before. It's like, I don't know if I should buy this Amazon right at the bottom of the dead zone, but boy, look, that looks like a genius purchase right now, doesn't it? For me and my trading style, it's in the dead zone. I don't touch it. Tesla, anything above 407.91, 408 today, if that should run up there, then that's probably a good short. Google above 309.5. Microsoft, it's got to dip down to 403.36 before considering buying it. And of course, SPY and IWM, we're in. And QQQ, it's in the dead zone. But if QQQ were to get up above 609, that would be a potential short as well. Now, I will say one more thing, and that is towards the end of the day, like the last half hour of the day, I really don't want to enter any positions. You can make some fantastic trades getting in with just 25 minutes left and then riding all the way to the end. If you haven't done this kind of trading before, that's not a good idea. It goes too fast. You get kind of panicked and you can't do it. I find that for myself, that kind of stuff, right at the very end of the day, it could go up really fast, but it can also go down really fast. And I find that it's easier for me to capture the profits if I can sit back and wait and be methodical about where I'm getting in and judging about how I should be able to get out. Okay, another tall green candle right in there. That's what I want to see. Kind of manifest it. So, hey, IWM is almost getting to, just one decent sized green candle will put us right up there above the 252.25 area, and that would be a place to consider taking profit. All right, well, that's it. That's it today in terms of, hopefully you saw how it's done, why I'm doing it, why I think it's a reasonably good trading idea, why I think this opportunity is going to continue for the next who knows how long. About the time it sort of slows down, then they'll probably start offering zero DTE on every day. And then you get even more opportunities to do this. But the same parameters, the same idea seems to matter. So I would recommend you consider looking at it that way. I'm going to come back again next week. So until then, everyone, take care, trade well.